Hey everybody, my name is Doug Pardick. I'm a financial planner and certified retirement counselor. Our mission is to strengthen families by helping you make excellent financial decisions and by helping you be prepared for things like a bear market. So that's today's topic. So we know that we've been in this long economic expansion since 2009. Now we're in the second half of 2019. It's been a long time. We all know that bear market is going to come, that economic recession is going to come. Nobody knows when, but you want to be prepared for it before it happens. So we are a group of independent financial advisors located here in beautiful Littleton, Colorado. There's a group of us working together, serving our clients, and we've got decades and decades of experience. So when we're building a bear market strategy plan, these are the things we're going to look at. You should be asking your advisor and yourself, hey, what if the bear market happens? What's my plan? Is it something that makes sense? Something that I understand? What is it? So this is in a general sense how we do it. So when that bear market comes, or if any emergency comes up where your financial plan has been interrupted, you want to make sure you start off with a fully funded emergency fund and then a little bit more. What I mean by that, a fully funded emergency fund, you take all your expenses that you know you're going to have over the next 12 months, plus you add in some unexpected expenses that may or may not come up, and you derive a number. That's the amount that you're going to put in cash, not into an investment portfolio that has volatility or risk. You want to put in cash so you know it's going to be there when you're going to have that expense sometime in the next 12 months. Once you've got that fully funded, I do think you can build a portfolio for years 2 and 3. Those expenses, not this year, but next year and the year after that, you can invest that. And we're looking at a net return right now around 3.5%. Now that's not guaranteed; that can vary. But I'd rather get some total return of 3.5 than just leaving it in a money market account. So invest in cash and then put some more into something that's going to get you some total return. The next thing you want to do as you prepare for that unexpected event like a bear market is you want to have enough highly reliable income or guaranteed income to cover your guaranteed expenses that you have month in and month out. Think your housing expenses, utilities, food, shelter, clothing, taxes, healthcare insurance, all those expenses that are mandatory. Make sure you've got enough guaranteed income like cash flow from a job, your Social Security, a pension. If you need your portfolio to have guaranteed income, we do have solutions that will pay guaranteed income that will not be interrupted by an economic downturn. So you build this just right. The next thing you do is take part of your portfolio and invest in a portfolio that's going to cover expenses in years 3 through 7. It's going to be lower risk, higher income. And this is where we're going to invest like an endowment. So an endowment, they'll do a little bit of publicly traded stocks and bonds, but they're going to do a lot of things like private commercial real estate. As an independent financial advisor, these are strategies that we can design for you in your financial plan. You may not see that at other firms, but as an independent financial advisor, we do have access to institutional quality investments. For example, in 2018, when your stock and bond portfolio likely had a negative year of -3 or even a negative 10% return, a portfolio that's lower correlation to stocks but with high income, we use private commercial real estate. We saw positive returns out of those strategies, 6 and 7 and over 8% returns last year without any volatility. That provides reliable income, and that's why the endowments and the pension plans use those types of strategies. We can too. So when you build this type of portfolio, you've got 7 to 10 years of cushion. So your other investments that are invested for the long term, and you're going after high growth, invested in stocks or growth real estate portfolios, those have time to heal. So if you go through a bear market and it takes 3 years for that money to get back to even and then begin to grow further, you've got time for that portfolio to do its thing. You don't have to panic. You've got a bear market strategy in place. To learn more about our strategies and how we do it, give us a call for a free consultation. Again, my name is Doug Pardick, 303-951-5987. Have a great day.